Now, Ray, the Wall Street Journal reported that Bridgewater is raising money for a new China fund. What is the latest on this, and what is so appealing about China to you? I mean, many are worried about rising debt levels, slowing economic growth. What's your take?
I've been going to China since 1984, long before they had any money, and I've been enjoying that. And over those periods of time, I've built these wonderful relationships, and I've seen them from. In 1989, there was a group in China of 7 people who, when they didn't have a financial system, were working out of a dingy hotel room, and that was for them to build the financial system. And I've had a pleasure of all through that time to develop wonderful relationships that, with time, helped them think through their their institutions. And so the relationship has been fantastic. So naturally, what we want to do is to continue to grow with them as they're growing in their financial markets. And the way they've opened up their financial markets and created capital market innovation over the last 3 years, really, I mean, it's been incredibly fast-paced, means that they have liquid markets which have depth and accessibility. So, of course, we're going to want to be part of that.
China's debt levels, is that a worry for you as you explore deeper into China?
China has a much lower level of debt, but they have they definitely have a debt issue. But the debt is denominated in their own currency. And what I found is that their economic policymakers are very, very smart and sensible people. The world has been talking about the debt problem for a long time, and we were one of the first to bring up the fact that there is a debt problem. But when a debt is denominated in one's own currency, it's manageable the usual ways. In other words, you might extend the maturity of the debt. You might alter whose balance sheet it's on. You might have the interest rates changed. You go through certain processes that we've been through to be able to manage that debt. And they've done an excellent job. I'm most importantly interested in the capabilities of the people who did it. We went through our particular debt problems. Every country does it. I'm genuinely excited about the quality of the leadership and in terms of practicality. They can get stuff done, and
right.
Their reforms are a move toward sensible, much more market-driven economics, but with guidance. So I see the innovation. I'm very excited about China. But anyway, it's like your question would be a little bit like asking me, would you want to leave the United States? Because the United States has a debt problem. I was here in the United States. I love the markets. We did well in 2008. In our business, the key question is whether you make the decisions correctly. There's not such thing as a bull market or a bear market. 2008, because we anticipated the crisis, we did well. In any country, it's the same set of rules. So China is no different than us investing in any other country that has liquidity and the right kind of markets. Whether they go up or down, we'll be there. There's no good reason not to be in China, and there's a special appeal because I know it well and I've been there for a long time.